Good morning, momentum option traders. Just wanted to go over a quick update on a few things like why we got into 2 new trades yesterday and what to do in case this market doesn't hold support. The first thing you'll notice is I have a chart here of Riverbed technology from yesterday. And the reason we got into 2 new trades was it looked as though the market was holding support. It was in a tight trading range. And then B, we knew that this General Motors IPO today was going to be pretty bullish. And futures overnight are pointing to a pretty significant pop at the open on Thursday. So we entered 2 bullish trades based on the market actually holding support and hopefully bouncing from here on out for the rest of the year and into next. As you can see, yesterday we tried to get these options for 140. The newsletter came out right at 1. And I had a strict limit to get in these options because I didn't want to overpay for them. But as you can see, shares came down and we were able to get these options, the March options, for $1.40. And I want to explain a couple reasons why I went further out with this trade and kind of what I expect. Now, as you can see, I've pulled up the March options here, and I'm using CBS Market Watch because my Yahoo doesn't work. It's not giving me quotes as quick to do this video, so I had to switch. But I can still show you, but the Yahoo site works better. But what I want to show you here is the quote for the Riverbed March 35 calls. I don't know why it's listing the 70 here, but as you know, the stock split. This has got a 70 call, but it's actually the 35 strike. As you can see, it came down. We were able to get in right here. But my hopes are this stock doubles by March. I talk about Netflix in this morning in conjunction with this trade because last year about this time we went with a December Netflix trade and a June Netflix trade, and the volatility from Black Friday knocked us out. And I'll let you read the rest of the newsletter, but anyway, I'm hoping this can at least double, which means we would be looking at a $60 stock, which would be beautiful. But realistically, let's just hope it goes to 40. Now, in your trading manual, I talk about stocks that run up and then announce a stock split. And normally what happens is they will run up into the split, then they'll consolidate, and then after the split, they'll run up, into the split, and then, like I said, consolidate, and then this is where we're at. And then we should shoot higher. What I like about Riverbed is it's in a hot sector right now, the cloud computing sector, and there are other names, but this one looks to be the one that we think can double. That was the reason again for getting into this, but if the stock can just go to 40, the options will be worth 5. If you did 10 contracts, it costs you $1,400, and if the options are at 5, then you're gonna, they'll be worth $5,000. If this stock is at 45, then these options are worth 10, and then you'll almost make, what, 10 times your money. If I could show you something, another reason I like this stock is because although analysts have kind of been jumping back on the bandwagon, you'll see they're like there's 30 that follow it, and if you'll notice, there's a lot of them that have this hold rating right here. And what this means, if the company can keep beating earnings and growing their revenues and taking market share from Cisco, then these hold ratings right here are going to be, moved up to overweight or buy, which is probably going to get some momentum behind this stock. But we think we got a great price, and we'll see what happens. The other one was Juniper. We've already been in 2 trades on this, but the volatility has knocked us out with small wins, but we've been trying to catch the triple-digit return with this one. Another name that's taken share from Cisco. We like this name a lot, obviously, because we normally don't jump in and out of a stock this much, but because of the volatility, we've had to. Now, the other thing I want to show you, again, we took these trades because I kind of figured today would be pretty bullish. But what happens if, this rally fades or today's open fades? Then some of you have asked, how do you protect yourself? Well, you can either play the NASDAQ, the S&P, or the Dow. But currently we have a call trade on the power shares. Now, if Dow 10.8 doesn't hold, even if we fall below 11, it means the rest of these indexes are going to fall with it. And for the Qs, that would be 2450. So this is like an ETF on the NASDAQ, and if it did close under 2450, some of you ask, how do you play the downside? Let's see. You would look at the options. You don't want to play November because they expire this week. And as a short trade, you could do the puts. And as you can see, there are 2 Decembers listed here. These allow more time, as you can see, because they don't expire till the 31st. But most people like to play the regular options. These are the weekly options that are kind of catching on now. But let's go with these. Like I said, if the NASDAQ were to break 2450, or the Qs would, if the Qs here would break 50, what you could do is buy the put here. You would buy the December. Here's the option date right here. They expire mid-December, and then you could jump on probably. Let's see. We're on the puts. It looks like. Let's see. You could go with. I would say the 49 put, because it's only $1 out of the money if the Qs fall below 50, and it's 50 cents. So if the Qs traded reverse course and got near 50, these options would probably be 75 cents or $1. But since they are a 49 put, let's just say the Qs tank down to 47, and you paid $1 for these options. you would double your money. Now, for let's say you wanted to jump on this rally this morning. Depending on when this video comes out, I don't know if you'll be able to, but you could look at let's see, we're at 51.72, so you could kind of look at the 52s here, or the 53s, and you could day trade these. Now, if you're doing a 20 or 30 or 40 contract trade, and you make 10 cents, then you've made 40, 400 or 500 bucks. These are tricks I really haven't expanded on or touched on, but you're going to see the market on days where there's an incredible lot movement. I mean, even more so than now, where you're going to be able to spot, like panic, and you would either, you could buy some puts real quick and jump in and day trade those. Or today, let's just say these open up at 110 or something, and the market surges 2 or 3%, then by the close these options might be worth $1.50 or $2, and you could probably exit the trade, thinking that tomorrow would be another test to support, or you could keep them open if you thought we were going to continue higher. Now, that's how you play tech or the NASDAQ. If you wanted to do the S&P 500, you could trade the spiders on that. And they also have options. So, excuse me, it would be pretty much like the same deal. You would look for a near-term call or put, and then decide which direction that you would want to go to. Here you could do, you could look for the 120 call to play as a further upside, or you could do, we say if the S&P breaks, or I say if it breaks 1150, then this is going to be 115. So what you would do, you could target, you could target these puts in here. Let me make sure these are December. No, these are November. Let me get the Decembers up here real quick. Let's see. I might have had that right. Bear with me. My computer's acting kind of weird. Let's see. Okay, here are the December options right here. All right, guys, you can see these are the December calls and puts. Here's the expiration. And again, if the S&P fell below 1150, then you would want to target. Let's see. You would target. Probably like the 113s or the 114s. They're 145, 150, or you could do the 113s. So again, if the S&P fell below 1150, you could try to get these options here as protection. That's pretty much it. Again, I wanted to explain a few trades we had, and I wanted to show you this one too. ARUN Networks reported after the bell yesterday, and I got a little bit nervous, to be honest with you, but as you can see, after the bell, the stock came down and tested support at 20, but they offered better than expected guidance. And by the end of extended trading, we had, made a high up here, and by the close, it was up 63 cents. Now, all this means is, we should open higher in the morning. But extending trading is, you can get into it, but it's really not worth the time and effort because you can't trade options on them. You can trade the stock, but, some of these people traded maybe when the stock got down here and rode it up last night and made a little bit of money. But, the real deal will be when it opens on Thursday morning. And if I can give you a chart, let me see here real quick. Okay. You'll see here, this is support right here in this 20 area. So, last night or after the bell yesterday, they came down to test the support, and then we bounced. And like I said, in after hours, shares were up. Now, hopefully it continues higher, but we're in a lot of good trades. I think that will do really well if the market keeps going higher.